All right, good morning, everyone. And we're expecting FOMC to be published last night. As you guys can see, we're looking at Euro USD on this candle yesterday, on the shift candle, and price was in the discount zone at 50%. And that's when I told you that I would like it to basically come down a little bit more, but it didn't come all the way down as I expected. So I took a small buy over here yesterday. I didn't send out the signal, took it on this order block over here. And as you can see, my TP hit, and then basically price was trading in this order block the whole time. But then FOMC came, and as you guys can see, it wasn't really that strong. It was kind of boring, to be honest, because the first push was only about 20 pips. Then price came back into the order block. Now, when price crossed 750, 1.10750, when price crossed over here, this is when I bought. So I placed the buy and a confirmation, because the reason why I bought it is because when it came down and went back up, because I know that FOMC is supposed to be a strong move, and since it's a speech, the movement will occur as long as the speech goes on. As I'm trying to say. So I took the buy over here. Stop loss was at 50% of the shift candle, more or less in just below this fair value gap, and then I had a TP set at the bottom of the weekly structure box, the yellow box. It didn't run all the way there last night, but I did hold it. I think I closed. The TP didn't hit because of the spread, but I did close more or less somewhere around this level, this institution level. So I caught about 30 pips on it, So what's going to happen next on Euro USD? Well, looking at Euro Yen, it looks like price is quite bearish. But based on the weekly structure, where it break to the downside, so we're expecting buys. And as you can see, this order block over here, last week's low, price bounced into it, and then it tapped into it, and then it went up. But we don't have a change of character as yet, but I just want to point out something interesting regarding this. So you'll see on the 1 hour that is a fair value gap over here, more or less at 155.150, and there's an unmitigated order block just below it. Now I expect, now there's also a pattern that occurs over here. As you guys can see, this wick, then we have a swing low, and then this wick is above that one, and then price pushes away. Now, if you go on a smaller time frame, for instance, let's say like 5 minutes, you most likely see a head and shoulder formation. If you can't see it, let me just point it out for you. So this will be the left shoulder, this will be the head, this will be the right shoulder, and that will be the move. So that is what I see over there. But with this also said, we should have a retracement in the zone. Now we should then also just modify this order block, and refine it to more tighter zone. As you can see, it's under 50% of this massive order block because I refined it. But if I just go back a bit as well on this 5 minute, you would see that even if we do try and refine it as well, it's still a pretty big order block. It was a pretty big candle. It's about 30 pips, so this is why I always say then go for the 50% or aim for the discount area, or if you are selling for the premium zone. Let's quickly check what's happening. So we'll come back to Euro Yen, just giving you an idea real quick as to if Euro Yen is supposed to do something like this with the interest rate decision, that means a similar pattern might occur on Euro USD. And I mean, if Euro USD has been rising since last night, we should see some retracements now in London session or New York session. We should see retracement in London session because the interest session is released just before New York session. So just looking at what's happening on Euro USD at the moment, like I said, to understand why I took this trade over here, It was a bit risky, but like I said, like I always tell you guys, risk management is everything. I still only made like 1.7% on the account because my total risk was about like 0.5%. So didn't risk a lot of money on the account. But what I'm seeing on Euro USD current at the moment is, so what I'm gonna do is, since you guys kind of have an idea what's happening. Okay, so real quick, one thing I didn't mention. So what I'm gonna do is I'm gonna just remove this big box because you guys obviously know what it means now. You know, we don't need anymore. This was basically the shift candle from year till year. This was basically the shift candle, and we were in the discount zone, right? So just gonna move it so you can see what's happening here. Now, remember what I always tell you, the line chart is your friend. If I go on the line chart and I take my trend line and I connect the lines from here to here to here, that's 3 hits, right? And if I put my candlesticks back on there, you would see that why I took this trade over here because of it was the 3rd hit and it swept it. So that was the liquidity grab just below that zone. And then that's when I took it. Now, then you would see that we had more wicks. Okay, if you can't see this line, let me just make it a bit bigger. And same for this one. Now you would see that there was new wicks formed over here. This liquidity grab. Price came back into this order block, but held it. Another liquidity grab. Now, if I put this on a line chart as well, you would see that it doesn't add up over there. But just to give you an idea real quick, if I draw this all the way over here, notice how the FOMC move was just another liquidity grab basically, because the people who then either had sell stops and stop losses over here, they either got triggered or got stopped out. And hence you can see, like I always tell you guys, wherever wicks don't lie. So wherever you see massive wicks like this, it's usually trapped liquidity, you know, and there's multiple ways you can do it as well. Like I said, if you go back on a line chart, for instance, if you go back on a line chart, for instance, even if you just take this line and connect it with this line, and now you have equal lows, and you'll be able to spot the manipulation. See, so, but overall, how I would look at this is I would connect these wicks, and I'll see this all as liquidity. So this liquidity has already been grabbed over here, so you know it's kind of in the past. But now my current focus is this liquidity over here. Okay, from here to here. Who has stop losses down here, or who has sell stops down here? Now, if we just follow trend going up over here, we see that there's a gap in the market, a fair value gap. If I just draw this out, and then obviously, okay, I'm not gonna draw all these things now. It's a change of character and so forth. Maybe just put this here as a change of character, and then put this here as the break of stuff. Just to give you an idea that we are now bullish in this market. And then notice how price basically came back, dashed this order block and kept on going up, you know, also pinned once again, came to the institutional level and then went up. So even if you, okay, I wouldn't recommend you trade at this time, but you get that, like, you get the idea behind levels and their purpose, you know. And then, like I said, as you can see, price did go all the way up, pinned into this fair value gap over here. Remember yesterday we pointed it out, it was on the 4-hour, I think, this fair value gap. And then I pointed out the full gap over here. Now, just looking at over here, the gap hasn't fully been filled yet. So it's hard to say whether price is going to go back there or it's going to happen next. Let me just find it, but okay, so like that. So that's basically about, it's only 2 more pips it has to go basically to fill that gap, but 2 pips in the market still be a lot of money. And then so there's a new day. Let me just put on my indicator. So as you can see, this is the Asian session mapped out over here. And notice how Asia just keep on rising, you know. Now remember, Asia is where they collect the orders. Now, if everyone bought in Asia, I doubt, like, you know, when you keep on buying in London. But what we could see in London maybe is some type of Judas pattern. What I mean by that is we could see price go into the yellow box, come back into the zone over here, and then tap into a fair value gap once again, something like this. You know, this is something that could happen, which could then drive price back to this fair value gap. And then if the interest rate decision is going to be this, is going to have the same effect, the bullish effect on Euro USD, then it could then make a new high after this. Because if you think about it, if you look at trend, you know, it is going uptrend. So this will still be a higher low. You know, so that's what I'm seeing on Euro USD right now at this moment. But even vice versa, you know, even something like this could happen. Okay, so don't get confused. I'm just gonna look a bit messy now. But even something like this could happen. You know, take out the Asia low, trade back into the low, come back towards this point and rise. Then most likely, same thing like I said, have a fair value gap somewhere around you or something like that. So guys, it's all about like having your zones and basically knowing where you want to trade from and seeing what will happen from there. So what I'm gonna do is I'm not gonna fix a bias on anything just yet. But this is something I would like to see. I would like to see it go up, take out the Asian high, come back into the low, have a free value gap for displacement, and then into from there. And obviously as well, the Fibonacci also has to then fall in line with the fair value gap, either the 618 or the 88% zone, you know, the extreme zone. So that's a great way for you to manage your risk and not have a big stop loss. So London session is about to open, and I'll send this out to you guys so you can watch it real quick. And then yeah, so we just have to wait for this anyway. Let's see how it plays out.